TFNN. Headline News Update.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN headquarters in St. Petersburg, Florida. 12 noon Eastern time on Monday, middle of the trading day, and we have markets in positive territory to kick things off. Dow Jones positive by 1 point. Far cry, and as we speak, negative territory. Dow now -2, trading at 25,914. S&P is currently positive by 5, trading at 2880, and the Nasdaq positive by 18, trading at 7920. Gold contract positive by $2, trading at 1201.80. Silver up 5 pennies at 1411, and dollar index with some weakness. Dollar down 259 ticks, trading at 95.075. Let's jump over to the Nadex platform. Take a look at some of these futures markets. We'll start things off with the Dow 30. So there's the negative action that we've seen. We'll go back to just before the opening bell. We're trading at 26,053. We're now more than 100 Dow points below that level, trading 25,930. NASDAQ 100, a little bit of volatility in both directions as well. We make a low for the session at about 10:15 this morning at 74.14. We're now up more than 30 points from that level, trading 74.48. S&P 500 with volatility as well, trading at 2880, about 2 points off the low that we made in the last hour. Crude oil trading a bit lower today. We were up there at 68.50 early in the session. We're now about $1 below that level, trading at 67.54 in October crude. Gold contract getting a little bit of a bid this morning, trading from about 11.97 up to almost 12.04. Pulling back a bit, gold trading at 1201.71, and Bitcoin hanging at 62.92. Tough week for Bitcoin last week, trading from 7,300 to 6,300. We open this week at that price level. Stay tuned. We have our man Basil Chapman coming up right now at the Tiger Technicians Hour. Then, of course, Steve Rhodes, Dave White, Tom O'Brien, all this afternoon. Have a great Monday, everybody.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. No matter where you're listening to TFNN programming, you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones, iPads, and Android devices, located in the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and call-in talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say You can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar is ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 10th day of September. And let me just start off by saying Happy New Year. This is the Jewish New Year to those celebrating, and may it be a healthy year. And we're looking at the Dow right now, down 10. It did run up quite sharply. It ran all the way to 25. Was that 9? Oops, right here. So earlier in the morning, from the opening bell, it ran up to 26,039. It's trading now over 100 points low at 25,909. To reiterate, as I said on Friday, we are short the Dow, kind of a catch up to the downside. Maybe the others bounce a little bit. Most importantly, what I'm looking at here is that if you look at the context of this rotational aspect that I always talk about, where you're looking at the IWM, the Russell 2000 running on the day that you find that the S&P is a little bit weak, or you suddenly get the semiconductors pulling back, dragging down the SPX, the S&P 500, and all of a sudden you get the Dow acting quite well as it did on Friday, and ran up today and then gave back. All of a sudden you've got the S&P up 0.27%, while the Dow's down 0.07, while 0.02. This is that mix that we're talking about, and that's going to impact and affect September's candles in the monthly chart. So now let's go through this. We'll start off the week, brand new week. Here we go, first full week here of September. The Dow's down 3 at 25,912. It's got that lowercase h pattern. The MACD turned down on Friday. The stochastic is down at 70%, below 80% of the daily chart. Weekly chart is still excellent. But if there is a close, because of the way I have studied these candle patterns, Steve Nissen wrote a fantastic book. He was really the person that introduced the Western world to the Japanese candlestick patterns. And I heard him years ago, and I thought, gee, that's great. And he pretty much made a course out of every single candle you could ever find. And then when I actually saw an ongoing panoply of his analysis in the different candles, and I went back and I looked at it, because the best thing to say is, look, if there's a particular candle, it should do something. So then you just look and you say, okay, it goes back. Oh, it didn't do it there, it didn't do it there, it didn't. And after a while, you turn around and you say, well, wait a minute. It's almost like looking at these astral patterns in astronomy. When they work, they are absolutely, your mind just flips right out. You say, how on earth could that happen? And when they don't work, you say, ho-hum, let's just move along. So it's like anything else. There are certain factors that come into play, and there are certain times where things work. It could be time cycle, it could be price, etc. So now let's just go through this. The Dow has made an unusual, a peak G top at 26,167 on the 27th of August. Pulls back, no big deal. It's actually used up a lot of time, just as it used up all this time from the 26,616 all-time high of the 26th of January down to the double bottom lows at 23,300s back in February, and then again in April. And we're in that rectangle formation. It hasn't gone back under 25,800, which broke the actual pink rectangle that I'm showing in the weekly chart. There is a chance that you can go from a lowercase h to a lowercase m, and then at some point, you turn around and you see that it's made the cup formation, that green cup formation there. So here's what I'm looking at. For me, the Dow is in a sell signal. It hasn't confirmed the sell mode yesterday, even though I've got this little inverted V-shaped hat right there, which essentially is what I have to put when I get a sell mode. But I had no choice. I've used up my down arrow at that peak E on the 7th of August for those Chapman waivers at 25,692. It worked fantastic. It went down to 24,954, 700 points, and then ran up and made a new recovery high, not an all-time high, recovery high, and then it started to fail. I'm calling this a G. It could be a G/B, but I just don't see that now, not with the MACD and stochastic failing. It's the weekly chart that is still pretty good in all the indices, and the monthly charts are still fabulous. So I'm calling this at least a short-term top in the Dow, a little bit, and I'll go through each one. So if there is a close above 26,075 this week, I have to be impressed and say, it could be a sideways move. We're just rotating through the different indices. If there is a pullback and there's a close under 25,800, I've confirmed in the daily chart a sell mode, and the weekly chart, and this is what I was going to get to. See this little doji, that's how I've got the whole Steve Nissen thing. That's the way my mind works. This little doji candle from last week, not even a long-legged candle, just a doji candle. If there is a close below last week's low of 25,805.94, that would say to me there's going to be a deeper pullback. We've got to think that 25,612, the 9-period exponential moving average, and then the 25,423, the 14-period weekly moving average, are going to be tested over the next 2 weeks. Just keep it as simple as possible. Monthly chart, as I said, is good. S&P, SPX.S. Here we are. S&P right now is up 7.58, stronger than the Dow, 0.26 at 2879.25. Tried to rally, got repelled at that trend line resistance. I haven't got it notated. Yes, I do. Peak E in the weekly chart of the 120-minute chart, pulls back, pulls back, pulls back, trying to turn up here. This is going to be very important, and I'll explain why. Because if the daily chart of the S&P can break above, I don't think it can, but if it can break and close above 2892.05, the high of the 6th of September, there's just a really good chance that here again, we're going to be using up time rather than price. If there is a close below 2876.92, the low of Friday, I'm going to make it 2875. A close below 2875 suggests to me that this is, and for the S&P, because it closed so sharply twice under the 14-period moving average, I put in a down arrow. And it's interesting, this is peak D, but if you go to the continuous contract, the ES contract, that is really a G right there. So that's the way these notations work. There's nothing I can do about it. That's the way it is. S&P, SPX, S&P. So in the weekly chart, still very good, still above the 2872's all-time high of the 26th of January. It made a new all-time high. The Dow has not yet done that. Neither has the New York Stock Exchange. So what we're looking at 2916, 3 weeks ago, the high that was made, that was on the 29th of August. We've pulled back steadily every single day, except today so far is the first bounce that we've had. That's above the 14-period, stalled at the 9-period moving average. That weekly chart says very simply, strong technicals. Let's look to see whether or not there is a close below last week's low of 2864.12. And if there is, that would suggest that there's a good chance this is going to turn into a peak F in the weekly chart, not an instant restart. If there is a move this week about 2916.50, you've got to be very impressed with that. And the monthly chart is very good. Gosh, we haven't even got to the Qs yet. Anyway, it's the beginning of the week. No rush. The QQQ is trading up 42 cents. Not bad action. It's really, I think it's going to fail. We'll be back. Basil Chapman, Tiger Technicians Hour. Dow's down 7. S&P's up 7. I'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So the QQQs, the Invesco QQQ Trust Series at 187.52 on the 30th makes an all-time high. Peak F, I call that. Long-legged doji breaks under it, closes under it, and then pulls back to the 180.44 level on Friday. MACD turned negative, stochastics negative. The weekly chart is just the MACD is just about to cross negative. In fact, as we speak, it is negative for the first time since it broke out back in June to the upside, and the stochastic is still strong at 84%, but it's getting real close to that 79 or lower percentage that'll say, just be a little careful. I'm looking at this and I'm suggesting to you that perhaps the upside is somewhat limited. I had a question about, because I'm looking at the macro angle, but I'm also including shorter term when I'm talking about, say, the SMHs, which having a nice session today, up 84 cents at 106.67. But that is that Chapman wave technique that I call the double hump. This is really like an M-shaped pattern where the MACD makes a pullback after a peak D or E, and then has a big rally. One of the technical tools has a big rally. In this case, they both did, and then didn't hold that rally because the MACD then crossed negative on Friday and negative on the stochastic. So that's what I call that isolated move that really has the alternate counter. Just a moment, goes to a peak G/B, probably a G because it's gone to the two higher peaks. This is very much like the weekly chart in the Dow back in October of 2007 when it made that all-time high. It looked like it was a top. A lot of people thought that was it. And then it ran to new highs and it went to that G/B. Turned out to be a G, and it pulled back sharply. So this is the same pattern, and it says if there is a move that is going to negate the strength of this arch formation, this last one that only went to two peaks. It has to get to, it needs speed. It has to get to like 108.30 really quickly. No, I'd say to subscribers, I think that the 107, what did I say today on the SMHs? I said SMH, C chart with alternate peak G likely, a weekly flag pattern, that's that weekly flag pattern right there. This time we missed shorting. In the actual SMH chart, I said that whole area, the 107, should be strong resistance. So today's high was 106.90. It almost got there. I'm looking at this as a potential short, but here's the issue. That oval pattern that I'm looking at in the monthly chart says, hey, wait a minute, it's still stuck in a range. And the weekly chart says, okay, define the range. And the range says lower highs and higher lows. That's what you get when you get a flag pattern or this triangle pattern. So we're on our way towards the lower part, but that lower part is also made up of Chapman wave inside track buy zone or support zone. And that says that if it gets between 104.70 to 100, if it's this week, it has to be to 103.50, that should be a containment area. And then you have to do the analysis to say, wait a minute, is the technicals improved in the daily and the weekly? Because if they haven't, there's a real good chance it's going to break that support. So in the meantime, back at the ranch, we're looking at this as, once again, a potential short. We didn't go long, we didn't go short over the last couple of days. We're just looking at it, trying to get another bounce because I didn't expect that big gap on the 6th of September to not just gap, but to gap and then close sharply lower at 106.15. That was a big move down, 108 to 106. So I'm watching it. My impression is going through applied materials, NAM research, etc. Now, I was asked, the reason why I'm here is that I was asked about AMD. A lot of people are trading advanced micro devices, and in this particular instance, darn, I can't find it. I will find it. I'll start doing the work in the meantime. I think it was Jason. Jason had asked about advanced micro devices. I had said that it was acting very well. I had a Joyce, I think it was Joyce, that said she's been long since about 12. Maybe it was higher than 12. I said, fabulous, you're doing great. I'm just saying to you, she asked, what would I do? And my impression was, if it was me going to this peak D the other day, I would just take a little bit off. I'd try to keep a core position and watch very closely. It's now at 29.12. The high was made at it was made at 29.94. It's just, it's holding at this upper level. The weekly chart is in leg D, but strong leg. I'm calling this leg F. I don't really know. It could actually be a brand new leg A in the advanced micro devices, a monthly chart. I'm calling it F just to be safe. And then I can make decisions because it has to go from daily to weekly and finally monthly before I really have to make a decision. But I like it. So, Jason, can you look at AMD on the show today if you have time? I have time. I'm going to do this. Why? Because in the rotation through sector to sector to sector, what we've noticed, well, at least I've made a big deal about, is that with even the sector itself, a look at applied materials was absolutely one of the leaders, and it makes this high back in 2018 at 63, what was it, 64, 63, 62.40 in March, and it's trading right now at 39.47. That is a serious monthly Chapman wave hat-trick top. The three time frames that are most important, daily, weekly, monthly, are all in sell modes. All right? Applied materials of all things. But wait a minute. Intel, which is always, if it's not on the cutting edge, it always has something in the background that could be cutting edge. Went a little longer. It went to, I think it was June. Let me just check. It went to June of 2018 to 57.60 all-time high. Pulls back. Oh, I shouldn't have said all-time high. I think the all-time high squeeze. The all-time high was 75.83, way back in August, September of 2000. Yep, I thought that I was making a mistake there. So it's always got something up its sleeve. It's an incredible company, but you know, they haven't really been leading edge at this particular time. Maybe they will be, but they haven't been for quite a while. So I'm looking at this and I'm saying, okay, Intel trading at 46.28, down 17 cents. Your daily chart looks terrible. Your weekly chart looks, what's the next best thing to terrible? Looks pretty bad. All right, not a very good sign. Something's not right. So it's advanced micro devices. Maybe they have either the cachet, they have something going on. Cachet probably the appropriate word. At this particular point, they have something that is really working. So all I'm going to say is, it's almost the same as what I said to Joyce. I like what's happening. If you're asking me, try to keep a core as long as you can by not getting too excited about taking too much off. What I would do is if this is a new position, doesn't say if it's a new position. Yeah, okay, let's just imagine that you asked me fresh, how's advanced micro devices? I'm going to say to you, it's a leader in the sector, and it does that periodically. Just let me show you quickly the monthly chart to show you how many times it's gone from the ones, or at least down the single digits, up into the 30s and even the 40s and 60s, just over and over again. Once it starts this mega move to the upside, it goes parabolic, and then it is done. It is done for years after that. That's the history, right? So all I'm saying is stay long as you can, because they've got something that is already working, obviously. But at the same time, would I put a new position in? You know what I would do? I'd rather see you put an option, a call option, a $30 call option, or a $27.50, if there is, call option, going out to even October, to be able to play, to garner some further activity on the upside if there is in advanced micro devices, limiting your losses. I'll be right back. I'll talk about it.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So I haven't got to the IWM or anything else yet, but let me just do this. I had just a real quick thing from Jeff. Hi, Basil. Happy New Year to you and family. Thank you. Same to you. I came across interesting idea. Waste management stocks hitting new highs. Thought you might have a look on your show. Yeah, some, and he lists a bunch. It's interesting. He's listed a bunch, and I have a whole other bunch that I was showing subscribers this morning. So let me do. I'm going to get to that in a moment. But a quick question about, and he also mentioned Amazon. He always tells me about Amazon hitting a round number high. He just did that today, a round number. It hit a 1971 round number today open, and it's trading at 19.38 at this particular point. And I made a big deal last week, and I said that Amazon, Google, I listed a whole bunch of index. So in fact, I've got Investors Business Daily in front of me. I can't believe it's just, I get the electronic, but I love the papers. Saturdays, I try to buy the paper as well. So they've gone up to $7 for the Monday edition, the IBD weekend edition. Anyway, so World Wrestling, look, WWE. I mean, I don't know if I'll have time now. I wanted to show you something. This is the number one is WWE, World Wrestling, trading at 87.24. Went to a peak D, pulls back a little bit, but still a green candle today up 22 cents. G/C doji high. I'm watching it. It's real close to some kind of a pullback, but fabulous action. Good technicals in the weekly. The daily says, just be a little careful because at 87, if it starts to trade under 85 in the next week, that's a real problem. Short term, not long term, but short term. If Grub is the next one. GRB, Grubhub. Trading at 140.92 down one, had made a peak D in the Chapman wave daily with a doji candle, quick peak C, quick peak D, and now all of a sudden you're looking at pullback. Weekly chart leg F still very strong, and monthly chart is really strong in leg D, but also getting a little bit toppy. So I'm looking at the Nasdaq and I'm saying, you know what, I think you're going to be joining. I think you're telling us a story here that there's some kind of an overbought situation. Nothing serious just yet, but enough to say, be a little careful. All right. So that's that. And the next thing I had was Boeing. Yep. Let's always look at Boeing. But typed it in on the chart. Don't do that. Type it into that little rectangle. BA. Boeing trading right now down 5.50 at 343. I have not changed at all. I still think consolidation going on in Boeing, sideways move, trapped between 358 and 338. If it goes under 338, that's very negative. If it goes above 58, I'd say that continues the sideways move. I don't see anything there. PPA, same thing. I spoke about it the other day. It surprised me because it went to that peak C. Maybe there's just enough strength left in Raytheon. Let's see, Raytheon down 94. Maybe not. Then maybe whatever it is, GD, General Dynamics, whatever it is, Lockheed Martin, I'm not sure. Something's going to just allow it to maybe go to that D, but it looks a little toppy, the PPA. Question I had about, a UTX. We still own UTX. It's trading up $1.72 today. We got stopped out of our latest. We're still long, but I wanted to add a little bit on Thursday, and then on Wednesday, and then it did nicely. And then Friday, it pulled back. I had such a tight stop that it got taken out. I think it was less than 1%. It was it was 40 cents at $134 stock, $133 stock, and now it's trading up again. It's stuck in this rectangle. This is a much more bullish pattern in the weekly than the PPA, the Aerospace and Defense ETF. So this pattern. I'm just talking patterns now. So far it's holding quite nicely. Did that. Question about EWH, I'm just including these now because I do want to get to the questions at the same time. EWH, oh my goodness, Hong Kong, isn't it Hong Kong? Yep, Hong Kong plunges down 22.87, minus 18 today. It's going to the 2260s where the 200-period exponential moving average is. A, B, how many times am I supposed to do this? Why do I keep losing these notations? A, peak, B, peak, C, peak, D, A, B, C, and it makes a peak D top, hat trick top in the weekly. Look at FXI. FXI is the China, the big one. China, there it is. The large caps, I believe. Yep, iShares China large cap ETF at 40.57. It is under the 41.36 200-period moving average for the third time in 4 weeks, 5 weeks. Not good at all. Not a good sign. Okay, so now let's do this. We're going to go back to our story. Just one quick one I had. I saw it earlier on. I did that. Positions. Well, the positions are that we've raised cash. There are still little odds and ends here. There are a couple of stocks. What I mentioned today in my newsletter is that the IYC, because of Amazon, has pulled back sharply. And it is trading now up 42 cents, but it tried to rally and it's kind of failing, made a peak D in the daily. That was leading, and it's in a leg E in the weekly chart, leg E in the monthly. If the IYC, the iShares US Consumer Services ETF, starts to trade in the 205 or lower area, Amazon, IYC, Consumer Services is going to take a timeout. I don't know how big the hit is yet, but it will take a timeout, and that'll impact the general market. And you'll have to see a rotation. Is there a rotation into the IBB? Let me just double check here. IBB is trading up just 6 cents. No, it's not. Look, this is an E/C in the daily. We're still long from the 100 and I think 110. Yeah, 110 area. It's at 117. It did hit 122. I'm just trying to hold as long as I can. I don't want to be outplayed here, because there's a chance we could get this whole correction, and a couple of the indices could hold very well, and a couple of stocks like the UTX just might not get taken out. They go to their lows that were made earlier in the year. I'm testing this whole thesis because we've taken profits, but we still have a position in these particular IBB and UTX. So there are stocks that I mentioned. For instance, SQ is still an amazing stock, but is it not getting a little tired at 89.70 Square Inc? I think it's kind of a little toppy here. So it's a fantastic stock. Just have patience. Put in maybe a couple of bids at lower prices. TTD, the Trade Desk Inc. self-service ads. In other words, you can make them up yourself if you're a big company. This whole area is doing extremely well. There was a Tube Mogul, was a company that was taken over and by Adobe. It's a very favorable area, this whole thing of advertising and building programs and software that other companies can learn to use to do their own work. So there's one that I love, but I just think this is SFXIX. As all of these we've had at some point just for a brief moment, and they didn't hold it long enough. And SFIX is, there we go. This is Stitch Fix, brand partners, apparel and stuff. It's gone to a peak F. It could be an alternate count. It's still holding really well. It's holding better than the others even. It's in leg E, extended in the weekly. Look at this. Still only a leg B in the monthly. It's just too high to buy. But they're on the list, and we're going to be following them closely because I think for the next big play, they'll be back in favor. So we've got a break coming up, and now I can go to the things that I left out. I did not go to gold. I just mentioned right now, gold is up 0.9. It's not under the 9-period moving average, under the 14-period moving average. It's struggling, but trying to survive. I'll be back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So if you're looking at my charts here, you'll see the 5-minute E-mini did go to that peak, made a peak C1, C2 top, and then had that big spike after the opening and went to 2888.25. A peak D was made, and now it's trading down at 2878 level. Not good action. I would not be surprised if by the end of the day, there's a real struggle to keep holding positive. Now, a couple of quick questions. So I'm just going to go to the GC. What's happening between gold and the dollar? Well, gold is up $1 right here. It's just stuck in this range, in the low range. Now that it's making some kind of a base in the 1195 area, if there is a close this week, any day, it's a close. It's not just intraday. If there is a close above the candle of the 6th of September high of 12.70, watch the dollar, because if the dollar pulls back, and it's holding quite well here, even though it's a red candle, it's suggesting that the dollar has a potential for an arch formation in the daily. That weekly, I haven't got a change in that beak for, I don't want to get into the complication, but the Chapman wave stalk formation, leg, body, neck, beak, I'm calling this still the beak formation, even though it's taken 2 weeks to go sideways. It's still the beak formation. It hasn't given me, the MACD has not turned up, and the stochastic is still negative at 56 in the weekly chart. So even though we're long the dollar, I'm thinking the dollar needs a little more time. So that gives a good test to see if gold is able to rally. Silver, same thing, silver right now. So gold was up $1, silver's up 0.25 at 14.95. Not a good chart pattern. High-grade copper is okay today. It's up 0.055 at 2.628, but it's really not a great pattern at all. Well, I'll add platinum because I get asked about platinum. Platinum's stuck in the same thing. Crude oil crude oil was rallying, then it turned around on Friday. It's turned around again today, down 22 cents. I think it made a peak E-top. In fact, I forgot to do this over the weekend. I was so busy. I should have put in a down arrow. This is definitely a down arrow in the daily chart. Weekly chart is stuck in this range, and the range is between 60, it's a 67.49 down 25 cents. The range basically is between the 64s and the 71s. A break above that is positive. A break below that is negative. I think it's just stuck in the range for now. TLT, very important. TLT is trying to rally. It's up 26 cents. But this is going to be fascinating for me because my look at the markets over the years has always said that money often flows from the equity markets if they keep coming down. The insecurity of equities, insecurity of securities, very often sees money. There's a migration from the volatility of the equities into the so-called safety of bonds. And we haven't quite seen that. If you're looking at the TNX, which is the 10-year T-bond yield, it's just gone to a leg C in the daily chart, making a cup formation. And that says that the weekly chart, remember I had the weekly chart. I'll just go for the moment to the TLT to show you the weekly chart. Let me squeeze this, oh, wrong one. Squeeze. Oh, I didn't even put it in. Has this H, lowercase h that goes to a lowercase m pattern, and it's stuck in range. I still think for the moment yields are stuck in a range. But when we start to see the market, when the Dow, if the Dow starts to break 25,400 and 25,300 at any point in September, I think you'll probably see the yields start to, like the market, the yields will come down and the TLT bonds will rally. That's what I'm thinking. That's the way it'll work if it's kind of traditional. Five below, question about that. Five below, yes. Five below is fabulous move. Leg E in the weekly chart, leg F in the, unless it's recycled in the monthly chart, and a screaming leg F, gap up leg F. The leg E on a Friday says be a little careful. Why? Because I usually don't like those Friday gaps, even if it's on news. But if you don't take out the low that was made of the gap, in other words, it's trading at 133.30. The low on Friday was 128.86. Day before it was trading at 116, 113, in that range. So this is huge. And if it, in the next 3 sessions, including today, tomorrow, and the next day, Wednesday, if it had, Monday, Tuesday, Wednesday. If it hasn't taken out 128.86, that's very good action. It could hold you for a little while longer. It will give back some of the gain, but this is really good action. Dow's down 32. S&P is now only up 5.5. Here we go. Within the context of the markets, I just want to show you something I thought was something worth revealing over the weekend, or at least was revealing to me. Within the Chapman wave 120-minute chart, there's a technique that I've used for a very long time now. It's something really that I just use. I don't teach it. I talk about it. In my newsletter, I show it all the time. And it doesn't always work, and sometimes I have to modify it, but it's really been a big help for me. I'm so pleased that I found it. It came out of an outgrowth of Elliott wave. It has nothing to do with Elliott wave at this point, other than five moves. So the Chapman wave 5 at the bottom. So the Chapman wave 5, right? Let me go from here. From the X at 25,608 back around the 23rd of August, ran up peak leg 1, 2, 3, 4, and it makes 5 at 26,167 on the 29th. That was peak E. And then it comes down in a very quick 1, 2, 3, 4, 5 to 25,805. That was the low in the 120-minute chart at 11:30 on the 4th of September. And then it runs in a very quick 1, 2, 3, 4. And I'm so pleased that I identified this the other day for subscribers, because that's what allowed us to go to the short side. I mean, maybe that's wrong, but at least it gave me a technical tool to be able to do it with cogency, with articulate my thoughts in a clear way. And now it's gone 1, 2, 3. The other's 4. If you know, Elliott wave 4 could not be above 2, just doesn't work that way. And I'm anticipating there's a move below 25,108. That's going to be the big thing. If there is, does this then recycle to another 5 waves down, or does it reverse and just go in an H to an M pattern and just chop around? And that's the big question. At this point, if you look at the MACD and the stochastic of the 120-minute chart, look, the daily chart MACD and stochastic in the Dow, very, very negative. 120-minute chart deflected lower in the MACD to give you that failure pattern, and then it pulled back and it deflected yet again in the stochastic. So this is negative, but you've got automated Chapman wave support levels. See all those resistance levels that it hit right there? Now you've got support levels from 25,868, and it's just above that now, 25,878, and then 25,793 is next, and then 25,735. Those are support levels. So we're just chopping in a very sideways move, but making lower lows, and that's going to be very important. All right, back to our story. Question I had here was, Bob wanted to know about Triple M. You know, Triple M acted pretty nicely considering it's in leg D right now. And the weekly chart did go to a B. This is what I'm looking at. Over the period of the coming weeks, there's a chance that we might start to see IBM, Triple M, and UTX, kind of still my trio of bellwethers, kind of forming bottom patterns that say, hey, we're not too bad. Now, I had a question about the XLF. Yeah, the XLF is the financials, and they're down a penny at this particular point, but stuck in this range. This could be an alternate count. PG. I'm not yet prepared to say that it is a G. It depends on if it closes at 28.31. In the 28.25 area, I'm going to have to call that an unusual peak G. And that says yet another arch formation, the weekly of the XLF. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Whoa, I got a lot of emails just coming in. Let me just go back here because Berkshire Hathaway was mentioned in the den. Yeah, BRK.B trading at 214.95, up 91 cents. This is a very interesting company. You see this double top that's perhaps forming in Berkshire Hathaway? I think it's going to tell us a lot because he is in everything. I mean, he's not just a stock picker. He's a company picker. That's the biggest difference between fund managers and running real companies. So I'm watching Berkshire Hathaway real closely. I suspect that we're getting to some kind of resistance area. But if Berkshire Hathaway trading at 214 at any point in the next 3 to 5 weeks starts to trade, I really mean trade, it can't just pop there and then come back down. If it starts to trade in the 218 to 220 area, that's going to be absolutely fantastic action and a really big positive, I think, overall for looking out of the market. Now, a quick thing. I was interviewed again. It was played a Financial Sense on Saturday at 11. I actually didn't hear it, but that's what it was. And I talk about raising some cash right here. The big picture is still very positive. I didn't even talk about the mega move that I think could come when all the countries start to go into bull mode. And we see internet trading, and it's just on the front page. It's everywhere you look. Every single ticker update is talking about the mega bull stock market. Before we get that, I think we need a pretty decent correction. That's what I'm thinking. Maybe time, maybe price and time. We'll see, but not a crash, just a real good correction. Meantime, Berkshire Hathaway is really, for me, a big clue. If it starts trading in the 220s, maybe we're already in that phase. I hope that we have a digestive phase first. I want to see stocks going from all-time highs into a bull mode. It's just not very good. Okay, so quickly, I did that. I looked at ACWI for GT. I'll try to do it again. I've got the Wilshire. We'll do that. I don't want to run out of time before I say this is an important week because last week was the week that told us that we had weakness, but it was still weakness within the context of having fantastic moves in those tech stocks. Now we're going to see is there follow-through downside action. Dow's down 38. S&P is just up a little over 5. We'll see where the close is. This is going to be a tough market. I think there's so many crosswinds. I think raising cash just makes sense. What are you going to miss out? So we'll have better bargains when they come up. And if it does rally strongly, you can add some positions. But I think raising cash is good. Stay tuned for Steve. Stay tuned for...
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.